Hi, everybody. It's the Plant-Based Business Hour. I'm Elysabeth Alfano. Happy to be with you today. Wow, may we live in interesting times. I think we have that covered. Some very interesting news popping that I'd like to talk to you about. Let's see if I can share my screen. News that came out just this morning, I'm very excited about. Look to your screen, those of you that are listening by video so you can see us on LinkedIn. I want you to see this in full. So this is the great work of, let's see if I can take this off, the great work of the Accountability Board, Sustainable Investments Institute, and also the Humane League. So as we move into proxy season, yes, it is a season, you see animal welfare is on more proxy ballots 2 years after ICON's fight. So ICON really going strong at McDonald's, you might remember 2 years ago now, saying that he wanted leadership on the board that reflected animal welfare. McDonald's rejected that, but that imprint, they're saying, still lives on. And now 2 years later, others are bringing animal welfare to proxy ballots with initiatives to get those reflected into company policy. So this is after Prop 12, which mandated in California, fifth largest economy in the world, that if you wanted to do business in California from anywhere in the world, you would have to do away with gestation crates. Those are metal crates that keep mother pigs in confinement with the inability to move, including turning around. Those were deemed inhumane by the state of California with Prop 12. That has been back and forth. In the end, it did win, even under appeal. But these are the sort of things that have been moving forward for animal welfare. So hats off to Sustainable Investments Institute, the Humane Society, and the Accountability Board. But this is not the only news. I'm going to stop sharing this and see if I can now share my screen again to bring on some other news, which I'm sure you all have been following. Hold on. Get that video screen shared. So Beyond Meat, it would be a week ago now today. You can see this on your screen for those of you watching in video. Beyond Meat having an earnings call, a really good one for the company. They had missed expectations so many times in a row, losing investor confidence, analyst confidence, but had a nice pop last Tuesday, up 106% in after-hours trading, according to Bloomberg. That was brought down to about 31% the day following the earnings call. Now it's tempered down more with a couple down days in the market overall, not just specifically for Beyond Meat. So I just thought I'd show you markets have wrapped now today, Tuesday, March 5th, and the company is at $8.39, up from about $7.50 where it was last week. But just to note that that company came out with notes that it had cut operational expenses by 2/3, that it had stopped the bleeding on revenue loss, and that it had had big growth in international sales. Now, I'm just doing a sort of emergency podcast on this, if you will, that will be out on the New York Stock Exchange web podcast platform, etfcentral.com tomorrow. It will also be on this platform on iTunes by Thursday. So if you'd like a deeper dive into breaking down the surge and the sink of the Beyond Meat stock, you can go to those websites and grab the podcast either on iTunes from this website, Plant-Based Business Hour and Upside and Impact, or you can go to etfcentral.com and get all the news breaking down the last earnings call for Beyond Meat with the understanding of our sector. There are many analysts out there breaking down Beyond Meat, very few that are sector experts. Okay, talking about sector experts, it's what I do on this show is I bring on the sector experts. I want to get right to my guest today because I think, am I the only one who's optimistic? I think we're going to start to see finally, after a 2-year hiatus, some plant-based innovation IPOs. So who would be better to speak with about this than the Vice President of Capital Formation at the Toronto Stock Exchange, George, I'm going to say Khalife. Do I have that right?
You got it. This was the first try too, by the way. So
good for me. We didn't have any time behind scene. Okay, George Khalife, I'm so happy to have you here. Please,
thank you
if
very
you
much
could. Yes, it's great that you agreed to do this. Please, if you could, I want to take a step back and just tell everyone, sort of spoiler alert, the Toronto Stock Exchange, TSX, has had a history of bringing plant-based companies to IPO, to the public markets. So maybe we'll take a step back. George, if you could tell us what's your history in doing, you and the Toronto Stock Exchange, your history in doing this, and why have you taken an interest in bringing plant-based innovation companies public?
For sure. Well, first of all, thank you for having us. Really appreciate the opportunity to have this conversation and the platform as well. So kudos to all the great work, Elizabeth. But before I get to that question real quick, so everybody knows, the TSX and the TSX venture operated by TMX Group has really invested significantly in the past couple of years, actually in the US. So I'm based in Chicago. I have colleagues that are based in California and Dallas, and all of us are really focused on working with private companies, many of whom are in the plant-based kind of food and beverage category, to help educate them on what it actually looks like to go public in Canada, raise public capital, and leverage public markets when you might be a little bit earlier stage to think about doing so in the US. So this is an important note to start off on, because it is a bit of a unique model for a stock exchange to have regional representatives that are very close and tight-knit in their local communities and ecosystems. So that's point one. To get to your question specifically, a couple of interesting things. So if you look at sort of the track record of plant-based food and bev brands and companies going public, I start with two things. The first piece is that this is a category that you know better than I do. Many of listeners know this. It's a capital intensive category, right? It's one that requires financing upfront for several reasons. This could be a facility, this could be R&D, testing, innovation in terms of flavoring or getting the product and label out to market and getting it on shelf space. This is not a cheap category to build on. Because of that, companies require financing. Now, I'm based in Chicago. There are a ton of food and bev based VCs that I'm close to, and they do great work. But there's also only so many of them out there. There's also so many out there that invest in specific categories. And sometimes if they do, the chances of them investing in other similar brands are less likely. And so that's the first piece, is that these are companies that are in a cap intensive category that require financing. The second piece is that we operate in the Canadian capital markets. These are public market investors that are generally very, very driven by themes. They're thematic investors. They're excited. To your point, I love how we're manifesting optimism for this year. They're excited about new, growing, nascent, emerging industries. Well, one of them happened to be plant-based food and bev. And we've seen this, by the way, with different sectors. We've seen this with cannabis, with psychedelics, sports betting, blockchain and crypto, space tech. There are so many verticals I can name that are in a similar bucket. So when it comes to the plant-based food and bev, you were showing a stock chart of Beyond Meat. That was, to my recollection, one of the bigger kind of first plant-based meat analog companies to go public back in 2019. It was also one of the best performing public offerings by a major US company in almost 2 decades at that time. And that's really what set it on fire in terms of that category. The second point I want to mention for a lot of listeners is, well, why is this even relevant, right? Okay, so we get it. It's a cap intensive category. Companies need financing. I get it that capital markets in Canada are very theme based. The coolest part of what we offer actually is a two-tiered model. On one hand, you have a senior exchange, much like NASDAQ and NYSE. It's the Toronto Stock Exchange, the TSX. This is for later stage companies. But before that, you have this junior exchange that's called TSX Venture. So many early stage companies start by going public on TSX Venture first. They then have the opportunity to graduate or uplist to the TSX, many of whom go on to actually dual list on a NASDAQ or NYSE afterwards. The reason, Elizabeth, why this is so critical is that companies on TSXV can actually raise anywhere between 5 to 15 million of public capital. And these are companies, to give you perspective, these are companies of market sizes of 50 to 80 million. That's on average their market cap. So it gives companies the ability to leverage public markets when in the US, you don't really have a comparable platform that is focused on the junior market. And I'll just maybe pause by lastly saying, what I've seen from plant-based food and bev brands is also this strategy to expand portfolios. And one way they do this inorganically, right, is acquiring other brands. And so by being public, you have this share currency that you're able to go out there and do M&A. So I can maybe afterwards we'll talk about, I have 2 or 3 companies I thought I'd highlight in this category in the US, but maybe pause there.
I'd like to pause here just to play mouse and follow up a little bit on some
Please,
crumbs so that my
let's
listeners
do it.
follow along, because you have dropped a lot of knowledge here, which is why I do this show. So I'm really grateful to you and that we're having this kind of conversation. Beyond Meat was the most successful IPO of a company since 2008. It had launched in 2019. It had 163% stock price raise in the day of. If you want this kind of intel, or if you want my breakdown on the Beyond Meat earnings call, please go to vegtechinvest.com, sign up for that newsletter, as well as these podcasts. Now, you had mentioned people just might not know this. They might think of, this is going to sound silly perhaps to you, but just remember the audience is larger. These might be brands thinking that the reason to IPO is for the publicity. It's
Right.
actually for the financing. And I love what you're saying about, and if I'm using the wrong expressions, you correct me, it sounds like a stepping stone. So that venture exchange gets you to the TSX exchange, which gets you to the NASDAQ. Now, the founder has a lot of work to do. You don't get there. You don't sail there. You have to, work your way there. But that would be the path to a larger IPO, which would be ability to raise capital if you're not getting that capital from government grants or venture. So it's a profound way to touch new capital markets for the size of the company that we're talking about. Now, on Wall Street standards, if you're talking about 50 million or 80 million, these are considered very small. Now,
Right.
if I could, I know we want to talk about some brands. I've seen brands that have market caps of like 10, 11, 12 million. We'll call them nano caps. So I'm curious, before we dive into exactly a couple companies and what some of the struggles have been. I mean, you mentioned
Of
cannabis. They
course.
didn't have an easy go at this. So before we talk about struggles, why the interest in these early stage nano caps? What's appealing to you all in this?
Yeah, it's a phenomenal question. And thank you for that check. And I'm actually going to use that analogy of the crumbs. So
Oh,
let's get
good.
into the crumbs. A couple of things come to mind. The first, let's start with mindset, right? In Canada, when we look at the capital market and how it's structured, by design, because we have these 2 exchanges, TSX, TSX Venture, investors in Canada are very familiar. They're very comfortable with the small cap market. Notice how we don't
Mm,
use verbiage like what I've realized is used in the US, maybe like nanocap or penny
yeah.
stocks. And the big reason is that, and I'm a big sports fan, I'll use a basketball analogy. This is equivalent of a company going, or a player going from the NCAA, right? College basketball,
Yes.
getting
Yeah.
really getting their experience, getting their comfort on a stage and playing in front of a larger crowd, getting their training minutes, right? It's a bit of
Yeah.
a more formal, sometimes could be hard, a challenging process. You're no longer playing in high school. You go from NCAA to the NBA, and now you're all
Mm,
of a sudden playing in the Los Angeles Lakers or the Chicago Bulls. I mean, to go from high school to NBA first is very difficult, right? You can imagine, and there's a
yes.
reason
Right.
they
Of
stopped
course.
that. And
Yes.
so that's why I love this analogy. And you see it in the private space. Well, you see it with incubators, accelerators. There's a reason why there's a staggered process. Companies don't go just from an MVP, right, a little idea on a notepad to a Series D financing. There's a reason why it's all staggered. Friends and
Yes.
family, incubator, accelerator,
Mm,
seed, Series A, Series B. There's sort of a logic behind it, right? And so that's the first piece. I wanted to talk about mindset.
mm,
The second piece, in terms of how I would say Canadian capital markets are leveraged. Well, to your point, for a lot of these companies, and when I walk through those examples, I'll actually mention their reason for wanting to do this in the first place. So you
good.
get an idea from the perspectives of different CEOs, not just the exchange speaking. But from our experience, having dealt with so many companies, they regard the Canadian capital markets, specifically companies that start on this TSX venture, as a growth path. Notice how this
Mhm.
isn't necessarily an exit path. Because to your point, I think you alluded to this a little bit, which is it's an important thing to touch on, which is most people commonly think of an IPO as an exit, right?
Yes.
The way we like to think about it is the ability for earlier stage companies, these are emerging, fundamentally sound businesses, right? Because they're still going through checks and balances, whether it's the exchange or the commissions. So there are safeguards, but these are companies that are building something exciting. they can take advantage of raising public capital and actually go from being, let's say, a 50 million market cap company to a 100 million market cap company, to graduate to the TSX with more comfort, with more sort of grit and understanding of how public markets works. Because to your point, it's not easy. It isn't. I mean, it's going to require different facets of the business. It's also going to require different, I would say, responsibilities from both the management team, but also the board. And so that's why that setup is so important for that reason. If you allow me, I'll end by, to answer the question, I'll end by just stating quick reasons as to why this is so important. Then we can get into the examples. So we already alluded to raising non-dilutive growth capital. Well, why this is important? Again, because not every company in every industry or vertical has access to private financing. One would think, right? These are companies.
Right.
George, this is a strong company. Well, why can't it raise privately? Well, maybe the company already tapped out its options, right? With venture debt, with private equity, with family office. Maybe they also want to raise capital that is on the public markets. So here are 3 other reasons why. You touched on exposure. That is a big one. Specifically for CPG brands, one of the companies listed on the TSX Venture, which I'll talk about in a second here, the Planting Hope company.
I was hoping you'd mention them.
Yeah. So Julia Stamberger, shout out to Julia, who's also Chicago-based CEO and company.
Yes, she is.
Loved one of the creative ideas they did as they were pursuing this IPO on the TSX Venture, and they listed at the end of 2021. They actually, one of their flagship products is a sesame-based milk. One of the cool things they did is they actually put their ticker on the milk carton. So I thought that was a nice piece to tie into the visibility of, hey, we're going public. You can be part of our growth and part of our performance. And if you're a big fan of the product, you have that association. So it gives you a lot of exposure. It builds credibility, even though you're early stage. Again, you're having to go through some checks and balances that most private companies don't necessarily have to. And the final pieces would be the acquisition growth model that you can pursue. A small ancillary piece, obviously, is a liquidity component, which at some point you could take advantage of.
Sure. And then you can work your way to that exit. If that is really what you're after, you can work your way to that, let's say, NASDAQ exit, which might be attractive. Okay, before we talk about the ups and the downs, the good brands and the bad, so to speak, in our sector, let's just say it's been tough out there for everyone. And is there any negative halo around, the cannabis sector, let's say, that came on fast and furious? Correct me if I'm wrong. It was around in the 2021. But it was a little bit, there was a feeling, this is a very callous expression. It is not my own. It is one from the street of like a pump and dump situation. So a build up and immediate suck the wind out of it. So I wonder if you could talk a little bit about the highs and lows and the risks and the successes, and maybe then we can talk about some brands.
Yeah. No, thank you for bringing that up. It's a fair point. It's a fair point. I think that's kind of the crux sometimes of these, theme-based investors, let's say. And it's important to mention that not all of the Canadian capital markets are only theme-based investors. I think sometimes they're helpful initially, and you can also partition those theme-based investors. Some really believe in this category. Some are plant-based, food and bev consumers themselves. Like some are vegan, some are vegetarian, and others pursue it only for financial reasons. And I think our job at the exchange is to try our best to work with companies and try to help support them by finding the right advisors and partners on the Canadian front who align best with what they're trying to achieve. In some cases, that maybe it could be a financial perspective that, hey, we'll raise the financing and we might not be your long-term investors, but let's work around and try to find who that actual long-term supporter and sponsor is. So I think that's an important consideration, which is why when we'll talk about things to consider, I have a checklist.
Good.
I actually wrote an article about this as well. It's a checklist. It's also the things you should maybe watch out for, and one of them is really to be diligent about who you partner up with on the advisory side, whether it's the accountant, the investor, whether it's the board member, right? Whether it's the lawyer. All these things are important to have into consideration. So I think that's the first piece. I think we lost one light. So I think that's the first piece, is that it could be a good and challenging. The good is that it gives quick legitimacy to a growing sector. It gives financial support and it deploys risk capital, and that's not easy. I mean, the
Right.
hardest stage to invest in privately, let's say, is the seed stage for a reason. On the public markets, when these public investors are deploying risk capital, it's usually to companies that aren't able to find that same level of support privately, right? And so I think that's the positive. What I would like to see more of, and we're trying to do our best to help grow, is an ecosystem of longer term
Mhm.
investors that stick with a company, that are there also for the right reasons, which is the mission, the sustainability, the actual core mission of the business.
And I'd love to comment on that because, I can't agree more. It's finding those right partners. And in that, I would include, excuse me, TSX Venture. So the fact that you can help these brands really solidify and whip into shape and get them ready for this baby IPO, if you will. But I don't want to obfuscate that it is the founder's responsibility as well to be prepared. There's no easy fix. There's no way around the work. There's no skyrocketing IPO that gets you to fame and glory. Without the solid balance sheet, you can see the pain Beyond Meat is in. You can see the work they've done to get their balance sheet in order. You can see how that was positively received by the street. So, you can watch the big party that Beyond threw in 2019. You can watch the difficult times. Now, it's not just that brand. It's COVID, it's supply chains, it's China's market crashing. Again, if you want the deep dive on this, please go to VegTech Invest and sign up for the podcast. Go to the Plant-Based Business Hour, get that podcast. But, I don't want to pin everything on Beyond Meat, as everyone does. There's lots of really understandable reasons for the fact that it was very difficult the last 2 years. But still, there's lessons to be learned, even for the baby IPO, that, it is the founder's job to have a company that is worthy of an IPO, no matter how small. And that's the critical point of a partner in crime, if you will, like TSX Ventures. So what are some of the brands? I mean, I have a couple other brands I'd love to bring up, or you can.
Sure. And maybe after that, I would love to go back to I call them the 6 common pitfalls.
Oh, we'll get there. We will.
So I think that's probably helpful for a lot of the folks listening. In terms of the brands, I mentioned the first one, which is the Planting Hope Company. I didn't describe it, but it's a portfolio of different food and bev brands in the plant-based space, or the plant-based category. Their flagship product is a sesame-based milk. They do dips, chips. This is a company that's based in Chicago, as I mentioned. They're listed on the TSX Venture, and they also acquired Right Rice and Argo Tea shortly after going public. The main premise for them was really twofold. It was to raise capital, and the second, actually more, I would say, kind of interesting one that's more peculiar to us, is it was a great way for them to gain that experience of being a public company, management and board, without having the massive spotlight of a senior exchange just yet. They do have aspirations to, at some point, uplist not just TSX, but the US. But I think that the more important part is that, they're building that cred, and they're understanding how to navigate public markets, especially in the past 2 years. That hasn't been easy on many companies that are listed. So that's the Planting Hope company. The second is a company also based in Chicago called the Fresh Factory.
I was going to bring that one up. I love those folks. Yeah.
Likewise, yes, we're definitely in sync, Elizabeth. I like it.
We are.
Yeah, no, another really, really cool company, right? Again, Chicago-based. Really, what they are is an infrastructure for the food and bev industry, and this is why I find what they do so interesting. Is, again, they're focused on clean label, fresh, plant-based. They help the products or brands go from farm to shelf, all the way from sourcing, from labeling, packaging, distributing, to placing it on shelves. They work with over 400 different product lines. So that's an interesting company. For them, it was that, remember in the beginning, we were talking about deploying, capital to emerging industries. They needed to raise capital, and they wanted to raise capital for growth for some of their, whether it's facilities or certain things they're doing internally. And public markets at that point was very excited about the category. So that was Fresh. And Yerbe is another interesting example that I'll end on. This is a company based in Arizona, also with Chicago roots. And Yerbe creates clean and simple plant-based energy drinks. So they're serving a pretty big market, not just in the US, but globally, and displaying why consumers are shifting away from, the sweeteners,
Hmm.
the additives, and a move towards 0 calories, 0 sugars. It's a beverage that has minerals, vitamins, without that jittery caffeine after effect. So I think if you look at these three examples, right, all in different spaces, they're all leveraging the capital,
Hmm.
despite the choppy markets and kind of these ups and downs. They're benefiting from the exposure and the credibility. And some of them are also deploying this acquisition growth model that we've talked about.
Right. Yeah, so very exciting. I remember, now this is back in the day because I believe they sold to a meat company,
Hmm.
Soul Foods. I believe
Yep.
they had gone public with you. And then the sort of elephant in the room. So we should probably talk about the butcher. What's wrong with me? The not Before the Butcher, which is a brand that does so well, but the they have delisted now. Oh my God, I can't believe this. The
Very
Butcher,
good food, maybe.
the Very Good Foods, right? Sorry, the Butcher was the part of the name of the product. Very Good Food Company.
Hmm.
Yes, which had had such a run. I mean, they'd not just had a wonderful IPO that went from, oh gosh, pennies, let's say 25 cents to like $5 very quickly. But they had also expanded production into the US from British Columbia, BC. And then that quickly came tumbling down. Do you want to review that story?
So what I'd like to do is, specifically because I don't want to comment on a single issuer, in a story such as the one that you pointed out. What I'd rather do, and I think it would still be accretive, valuable to a lot of listeners, is back to that comment on common pitfalls is one way to put it, but
Mm-hmm.
I would say challenges sometimes could be mistakes, things to avoid, and this
Yeah.
isn't tied to this case study that you were mentioning. I get this is really just more general. It is an article I actually packaged through one of our point of view articles, so it is on my LinkedIn. But let's go through them. It is helpful,
Yes.
right? Because I think one of the things that, to your point, I think you alluded to this before, but it's the CEO, the management team, the board do have a lot to play in this for several reasons, right? Whether it's the preparedness, the readiness, whether it's continuing to operate the business while you're going through this path on going public. So some of the things that I've realized and some of the things the team has realized working with companies is, number one, it's going to take usually 6 to 12 months to go on this path. Some of the preparation happens during, some of the preparation happens before, and a lot of the prep also continues to happen after. So the fact that you need to know that you need to be prepared and to be a little bit patient to go through it, I think was one of the first really important tenets. So really, this is the category of, are you ready? Is the company ready? Right? Do you have the right management team in place? And that's everything from the CEO to the CFO to the board. Does the board have good composition in terms of diversity, but also industry experience and technicality? All of those are important, but also, do they have capital markets knowledge? Many of the
Right.
times that
Agreed.
could be a requirement, right? Like, do
Yes.
they actually understand the disclosure systems, the governance? These are some nuances that could be specific to different exchanges. The US and Canada are similar, but there are still nuances between, say, TSX Venture and NASDAQ.
Yes.
So reviewing that is important. Audits are going to be part of the process, right? So for TSX Venture, you require 2 years, whereas on TSX, you require 3 years. Getting those in shape, but more importantly, meeting the right advisors ahead of time and starting that process. So that's when I say 6 to 12 months, just start to think about what do those things look like? Do I actually understand the listing requirements? And can I do that early? Because most companies think, George, I'll get to it, when the time comes. And what we try to always tell companies is, listen, if this is down your path in the next year, 2, 3 years, the best time actually to start, do it now. The worst time is actually when you want to launch and you're scrambling to get all your stuff and you're still operating and managing a big team. Too many headaches for one CEO and CFO. We stress the need for a professional team. The biggest point I want to make on this is, when you're trying to work with lawyers, bankers, accountants, whoever the stakeholder is for you, the investor relations firm, just make sure that you're picking firms that have operated in the relevant industry that you operate in. So if you're in the plant-based category, have these advisors worked in the plant-based category, ideally. If not plant-based, maybe because it's not as large in volume, let's say at the moment in public markets. Have they worked in food and bev? If not in food and bev, have they worked in consumer products? So try to align as closely as you can with advisors with that experience. The big thing I also notice, Elysabeth, and not too different than private markets, but is really emphasizing clarity in how you communicate the business model. The last thing you want to do is, everybody knows you're intelligent, you're smart, you're operating a business, it's doing well. But I think the part that we try to encourage CEOs is knowing when to get in the weeds and knowing when to keep it high level is super important. So actually understanding the audience, because bankers and public markets investors, they want to see that you can, in certain scenarios, if it's an interview, if it's a podcast, if it's a keynote, if it's an earnings call, can you repurpose the message and can you deploy the vision and mission in ways that resonate with the audience in the context that you're speaking in? Super important. You're on a public stage. So this isn't in a private, cave in the middle of nowhere. And you want to take advantage of that you are public. So use it. Use the platform that you're given. That's why it's so important. I'll end very quickly on a couple last ones. Over-promising, under-delivering. We've seen that from time to time. That's tough, right? Especially in the beginning. As soon as you hit the stage running, and I tell you, Elysabeth, we're planning to grow from 5 to 20 stores or products. And, when the report comes out, I really grew from 5 to 8. Tough for a lot of folks to digest, especially early on. So just be cognizant of that. Know your proceeds or your use of proceeds really well, especially when you're planning to go public. How much am I raising? Understanding the valuation, making sure it's realistic with the path you're taking, i.e., your valuation if you're raising privately could look differently than if you're pursuing an M&A, could look differently if you're going public. So make sure your comparable set is right for the path that you're trying to pursue. And then finally, as we said before, start building relationships today. If you want to pursue this path, this is the time to do it.
Yeah, I have a little bit to add there. So again, because of some very wild and exciting headlines from 2019, this is a path towards capital. This is not an easy path towards capital. So it might appear that way from headlines, but it is a long slog of paperwork. And so really be prepared. So as George says, be prepared. I would say, and you say know your numbers and understand capital markets, I would say have control over your balance sheet. Really know those numbers and have those numbers under your command, just not in your knowledge, but in that balance sheet. So have your path to profitability and really understand how you're going to get there without overpromising and under-delivering, because that's the kiss of death. And Beyond Meat's trying to work their way out of that right now. As Ethan Brown sold the dream, he was going to change the global food supply system, which indeed he could do. But the overselling of that dream without enough emphasis on the deliverability of numbers is a large pitfall. And I do fear that many brands are starry-eyed about the capital potential, but aren't ready in the sense that they're not good enough with finance, investing, capital markets to really whip that balance sheet into shape like it needs to be to find a path to profitability. Because ultimately, if you want to up yourself to the next exchange, be it TSX and NASDAQ, you have to show profitability and you have to really have command of that.
I couldn't agree more. I mean, especially in this market, I know one of the things that we thought we'd talk about is what does it look like moving forward? So that's actually a great segue, because speaking of profitability, in this market, and this isn't just for the plant-based food and bev category. I mean, we're seeing this among other verticals or industries, that profitability is being looked at more seriously than in previous years. And part of it is, you have a lot of early public market investors that in 2021, I would say, backed a lot of companies that, one could make the case, should they have been public, should they have not? tough to say, especially in that market when there is that opening and there is the capital available. It's always easier to say that in hindsight, I would say.
Yes.
But this is the environment and the dynamic that we live in today, which is that companies, and this is what I'll say to you, on TSX Venture, if companies aren't at profitability today, there is some leeway that's available. What matters more is, do you have clean line of sight, like really
Path.
clear?
Yeah.
Exactly. That's what a path means, right? And what investors that we know want to see is it within a year? Are you close to break even? And tangibly show me. It's not just a talking point. And there are ways to do that. So I think that's the first piece. The revenue, sort of the top line revenue figure, is also being scrutinized a bit more. So even on junior exchanges, we're looking for slightly higher revenues. And this isn't necessarily from our requirements. I'm talking from the realism of you being able to attract capital from the street, essentially. And that's more around the 5 to 10 million mark, whereas 2-3 years ago you could have had slightly less revenues and attracted many more investors. The third piece, Elysabeth, too, is companies not being desperate for cash. I think is a really important thing, specifically if you're looking to go public in Canada. What you don't want to portray is, hey, we're a company that completely out of options. This is it.
Right.
The Canadian capital,
Mr. Bust. Right.
There's no other. And so imagine you're sitting in front of whether it's an investment banker or whoever the individual is, and you saying that, well, what's the growth? Of course, I'm thinking to myself, what's the growth story? So that's important. Having strong, marketable customer logos has always been important, still is. Seasoned, credible team. We talked about how to construct those that are relevant to public markets. Being and staying in an exciting category with positive growth. The one point I want to mention here, important for U.S. companies, you could sometimes think that you're in an exciting category, but you're really serving a very niche segment. So it's exciting. Yes. Of course, there are some growth, but is that growth limited to the state that you're in? You see where I'm going with this?
Right. To understand your total addressable market, your TAM. Is it a large TAM or a niche? Investors are going to want to know that. And understand that times have changed. So while you could have gotten capital in public or private markets on a good idea, because I do remember some IPOs, vertical farms, et cetera, who had no revenue and had still gone public. That ship has long sailed. So we're back to know your numbers and over deliver and under promise. It's actually what Beyond Meat just did in their last earnings call. And that got applause. So over deliver and under promise and know those numbers with a real command of investing, finance, capital markets, and that path to profitability. So let's talk about the sector because times have changed. You remain bullish. So as does TSX Ventures and TSX. So on the plant-based innovation sector, what do you see? I used to ask this question like for the next 10 years, but life changes so quickly now. I'll say, what do you see for the sector, which is going to be reflective of the economy as a whole, I guess, in the next 3 years?
Yeah, I love this insight. And I do remain bullish. I mean, I just want to point out that both Fresh Factory and Yerbay, which we talked about before, some of those case studies, they listed last year in 2023 on the TSX Venture. So I want to make that final point that if you're a solid company, if you fill those gaps and you really push through, there will always be a market. That's my personal philosophy. It's one that if you're a good company pursuing this for the right reasons, there will always be the right time and window to pursue it. Yes. So that's the final piece there. In terms of, so on the views of the sector as a whole, thankfully, Elysabeth, last week, I actually attended a really, really solid panel covering the food and beverage space at Blue Sign Ventures headquarters. They're a Chicago-based food and bev investor, just closed a third fund as well, 45 million. So shout out to them. But I got the chance actually to listen. So I'm giving you real-time anecdotes of both founders and investors. So I think it would be interesting and I compiled some of those insights for the podcast today.
Thank you.
6 things to touch on. The first is, costs are not declining. Many of them are rising, specifically for companies, emerging brands that are trying to be innovative in the proteins they're using, so alternative proteins, but also trying to use authentic local flavors. I'm seeing this a lot actually in Chicago, whether it's, the company that's using African flavors or Indian flavors. They're trying to bring their local recipes
Yes.
to our market to share with North America in this case. So they're trying to offer value through taste and affordability. That's the first piece. That's part of the innovation I'm seeing.
Mm-hmm.
The second piece is us as consumers and shoppers are always seeking deals. We
Mm-hmm.
always want new flavors or innovative flavors. We want new experiences. So it's actually becoming much, much harder for brands to secure retail shelf space because there's a lot of competition.
Right.
And when you think that we're loyal consumers, most brands will say, "Hey, we're just focused on our loyalists," right? But think about it, and I thought about this even as a consumer, right? I love sparkling water. Today, I go to Whole Foods and I pick up a LaCroix. Tomorrow, I see Spindrift, and they say on the packaging they use real fruit. I'm like, "Oh, cool. Let me try Spindrift." The third day, I come across and I see a different flavor. So that one has to be a bit cautious about what a loyal consumer means in today's market, specifically for CPG.
Mm-hmm.
That's the third piece, or sorry, the second piece, I should say. Third piece, I would say that the consensus among this group was that 2024 seemed more optimistic from this supply chain piece,
Yes. Yeah.
specifically because they see more enhancements coming. So they see a better market condition for us. Fourth is that brands must continue to adapt in a very changing landscape. In this case, what we're talking about is retailers continue finding ways to sort of squeeze margins.
Mm-hmm.
So that seems to be shifting market demand, and you have to be sort of careful as to how do you maximize upside where you're controlling your costs to gain shelf space. I think that's the important piece because consumers are. This is the interesting one: is consumers want more and more and more, and
I know.
their habits are changing. Clean label, fresh, local,
Yeah.
plant-based. How do you do that and offer it without driving the cost to the consumer?
Yeah.
Otherwise, the price will be out of their comfort zone.
And you can't be everything to everyone because
No,
you look at this list and now you've got, oh my gosh, you have to be low and you have to be special and you have to be natural, but you have to have costs
exactly.
as if you were generic. And the grocery stores want blood more than money at this point. It's like beyond the realm of money. It's gone to blood, So if you're not JBS, how do you get on that shelf? So I it's important to understand, as you say, what it means to have your loyal consumer. That will change according to deal. I do think,
Mhm.
the Good Food Institute says it's price, taste, and convenience. I think it's price, price, and price, at least today. So understanding which part of the market you're carving out and then doing your best to serve them with deals. I don't want to cut you off. You were on a roll. You've got more to say, but I just want to say
No,
this is the long list and we don't expect everyone to be everything to the whole world.
it's precisely, which is actually a very good addition to what I want to say in terms of a founder painted this beautiful picture. He made with his hand a gesture of a triangle, and he was saying I think the three tenets on this triangle were taste, authenticity, and say health and wellness.
Huh.
His point was to say that you can't be all the dots on the entire triangle. Meaning, if you want to really pursue and prioritize taste, you're going to have to compromise one or the other. Could be health, it could be authenticity.
Mm-hmm.
Vice versa, if you were to prioritize authenticity, well, you might have to sacrifice a little bit of the health and wellness piece.
Mm-hmm.
So just think about which levers you're willing to place, because it can't be the most optimal, authentic, local, healthy,
Mm-hmm.
all of the things that you're looking for. It can't be number one in all of those categories.
Mm-hmm.
So which one is your number one? And then finally, we touched a little bit on artificial intelligence and generative AI.
Yeah.
I think that piece to me was an interesting one because specifically from the marketing piece. So for a lot of brands out there, thinking about how do you optimize, automate a lot of your marketing effort is going to be helpful, but also optimizing your supply chain visibility are two components that everybody on the panel really touched on. So I know we don't have the full time to I mean, this is a panel by itself or a
Yes.
conversation by
Yes.
itself,
Yes.
but do explore that further. And Yeah, hopefully those were some helpful insights.
Very helpful. I am interested to see what AI does to enhance the consumer experience.
Hmm.
So it'll be interesting to see if there are costs that are shaved by AI becoming the marketing arm. But I'm wondering if there isn't, I just want to see what AI does to the innovation piece of this equation. And I think innovation is going to be a really key area to blowing up the category. As we say, there are many international flavors that are yet undiscovered, like Thai basil rice alternative meat dish. There's the flavors, innovation in flavor and food science, and where AI can help there. There's innovation in ready to make meals, or lots of younger people like eat standing up on the go. So what's it going to do to the shape and the form? I think AI has lots of areas, and I hope some of them are cost cutting areas, because ultimately it does really, oh my gosh, come down to that. I will want to say, kind of being the ultimate mouse here with our crumbs, tying up something from the very, very, very beginning. We had talked about Canada, which, by the way, it's not only Canada that invests on TSX Ventures, right? Of course, I have bought things from the United States. I've bought stocks on your exchanges. So the whole world invests when you go through TSX Ventures or TSX. But I wanted to say, compared to themes like cannabis, does the world need cannabis? Maybe, but the world does need food, and it's not an option. So for those who don't understand the global food systems transformation, part of the reason it's shifting is, of course, sustainability, but it's also that the way we make food today is not an option for feeding the global population. It is too inefficient. And where there is inefficiency, there is disruption. Therein is the enormous wealth creation possibility. You don't get wealthy because one company upped their revenue 3% in a quarter. You get wealthy because people shift from the horse and buggy to the car, from the landline to the cell phone. That's real wealth creation. So as we talk about that opportunity for investors, this is a sector that is so inefficient, so old school, that has been protected for so long by lobbyists and subsidies, that it is not ripe for disruption. It's like a century behind disruption, really. I mean, at least 70 years, let's put it that way. So disruption's going to burst, and it's going to be a huge wealth opportunity, and it's going to be driven by necessity, where some of those other themes that kind of popped and fell, there wasn't really the necessity behind it that there is in this sector. That's all I'll say. Okay, so as we wrap up here, I'm going to give you any final words. Otherwise, I have a quick couple of personal questions, just to see, how you shake through your day.
Yeah, sure thing. I mean, the closing comments are, one, thanks to you again. This was a wonderful conversation. Hopefully, it was of value to everybody. Please feel free to reach out to, whether it's myself, Delilah, my colleague out of California, or Eric in Texas. We're always happy to chat. We love building relationships early, and you'll find very quickly we try to be of value to you way before you might want to leverage public markets. So just please feel free, and we're always in the business of making new friends.
And a quickie business exit question before I go to the personal questions. If a brand comes to you and you really feel they're not ready, you'll tell them, yes? So not everybody gets through the door. Is that correct?
We should, and we have to. Yeah, of course. We don't want to waste anybody's time, especially a founder. We care a lot about founders. I was with a startup formerly before joining TSX, so I understand how critical time is to them. One of the things we could do, though, is if it's not right for you today, can we map out what it would look like, or maybe some homework to start thinking about in the next year or two? And can we open some doors in the meantime? I mean, we have an ecosystem of 3,500 companies plus, right? It's a total market cap of 4.1 trillion. It's a huge ecosystem that we have, and we always love opening doors when it's a fit.
And I'll just remind everyone, before they perhaps reach out to George on LinkedIn, do get your lollipops in line. Please get, we've given you some structure here. So start getting that balance sheet together, get your questions in order, really take a look at your business. Think if you're ready for it. Don't just reach out because you're hoping for a windfall to fall from the sky. I know it's tough out there, but please be organized before you reach out to George or myself. Of course, everyone's invited to reach out to me on LinkedIn and to go to VegTech Invest and to sign up for our newsletter and get that Beyond Meat breakdown of what just happened in the earnings call from either the Plant-Based Business Hour or the New York Stock Exchange Upside and Impact, where you can find my podcast for them. My exit questions for George is, George, what do you wish you knew 10 years ago that you know now?
What do I wish that I knew 10 years ago that I know now? I would say the biggest thing for me, to be honest, is nothing is unsurmountable. You know, that everything that you tackle is much larger in your head, and you make it much more grand than it actually is in front of you. And so 10 years ago, knowing that piece, that it's not as serious, it's not as mission critical, it's not as crazy and daring as you might make it to be, actually allows you the freedom, the flexibility, the comfort to tackle a lot of the things that used to seem to me very daunting. And more importantly, to have fun with it, because all of our times here is very limited. And so when you operate with that kind of, I would say, consciousness on a daily basis, that, leverage it, because we're here tomorrow, we're gone the next, and you got to make the best of what you have.
I love that we meld finance and consciousness in the same podcast.
I know. I never thought I would use that word on this. There you go.
For you. I will do a gross injustice by paraphrasing Colin Powell, who says, everything looks better after a nap. That is my paraphrase. It kind of gels with what you're saying. Okay, it's a quick day. You're super busy running around. It's not going the way you would like. What is the phrase you tell yourself to get yourself back in the groove?
Snap out of it. And actually, we'll do this. So maybe a quick walk, especially when it's nice out. We try to leverage the weather whenever we can in Chicago. But if something really isn't going my way, I try to. It's like a physical association that I have, that I just snap out of it, move on.
Good for you. Good for you. Same day, still running around like crazy. Things may or may not be going your way. We don't know, but we know for sure you didn't have time for lunch. What's your go-to snack?
Either a protein bar or almonds. I always have them in my office.
Baked or raw?
That's a good question. I both. The ones I have in my office are baked and slight sea salt. So.
I like dill pickle flavor.
That's good. That's a bit of a, it's like I have different almonds for different purpose,
Yes, for different mindsets. Yeah.
Exactly. Is my day going great? Dill pickle. Is my day,
Oh my word, it's too funny. George Khalife, I want to thank you for being on the Plant-Based Business Hour, and I thank you for all your work you do at TSX Ventures and TSX. You are the Vice President of Capital Formation. People can find you on LinkedIn, or they can reach out to me as well. Find me on LinkedIn. This has been a knowledge drop. So everybody, if you're thinking about what you need to know before you IPO, you hopefully got that knowledge drop here today. Again, go to VegTech Invest and sign up for all the insights, and go to the Plant-Based Business Hour and Upside and Impact, both on iTunes and Spotify. You can catch those podcasts anytime. I want to thank you, George, for all that you do. I'm in Chicago in April, and I'm in Chicago in June, so maybe we can have coffee.
Love it. I look forward to it. And thank you, Elizabeth. Thanks to everyone else for tuning in.
That's wonderful. George, don't go away, but everybody else on Facebook, LinkedIn, Instagram, YouTube, and X. I will see you all next week. George, stay put. Bye, everybody.